They probably have to pick a path, right? Do they want to just be essentially a factory, throwing out compliance, or do they want to become very people-focused?
If you look at manufacturing, the dominant model now is the ideas proposed by Toyota, which is actually melding automation and people really closely together.
AI is exciting, but over-reliance on it undermines the subjective nature, the relationship nature of what we do with clients.
The thing I experienced the other day is went to networking and talked around a room, and only I think one person in that room said they actually would go to their accountant if they were seeking business advice.
AI can't really replace a lot of that nuance and doesn't know how to judge for it, doesn't know how to predict for it.
There are some people with some very massive marketing budgets pushing it into every factor of life, including accounting.
HMRC are abandoning making tax digital for corporation tax.
There's more of a shift to automated and self-service processes. Most of us, normal Joe Bloggs people, you're not trained to do the types of filings or the awareness of exactly how to do something. It was never taught at school.
I was really taken aback in the fact, whoa, this seems pretty big. And then following that, disappointed with actually what comes straight away.
Now we're going to go full circle to something that has clearly kicked up a bit of controversy, the 36-month contract. Having been subject to that in banking infrastructure with a lot of different banking tags, I am so in favour of change.
I am still human. I do more and more digital work, so the cyborg version of Ryan may be off in the future.
Hello and welcome to another episode of Digi-Tools in Accrual World. Today's podcast has been brought to you by Content Snare. Content Snare is a tool that's very good for sharing information back and forth with your clients if you want to share it securely and they would like to share information with you. And you're looking for platforms ahead of MTD, then this is one you might want to check out. And once again, our series has been brought to you by Advancetrack, who will be joining us on today's podcast, and they're talking about the impact of AI on future talent in the industry and whether we're producing more of a kind of factory line of accountants for the industry based on the trends that are available and also what their thoughts are on that. So Ian Gregory, the CTO of Advancetrack, will be joining us on today's pod. And we'll be bringing to you a series of different news articles that we think are prominent in this week's episode. And once again, I'm joined by co-host Ryan Piercy. Ryan, how are we this week and where are we and what are we in terms of life, work, jobs, etc.?
Well, in relation to what are we, I am still human. I do more and more digital work, so the cyborg version of Ryan may be off in the future. But I'm refreshed to some extent, but also poorly. It's a weird contradiction. So having had a holiday that I've just come back from, I do feel quite refreshed and raring to go from a work perspective. But it seems to happen on every holiday at the moment, hit with a bit of a cold, and so slightly tired. But I've seen it's just you and I again, Indy. We've lost the infamous John Toon.
I think actually we can forgive for the fact that we all decided to take a break for the last week, and some longer than others apparently. So I'm sure he'll return presently, but at least for now, you and I have both at least had a mini break, and we can then crack on with today's app news. And we've got some, a bit of a selection, haven't we, across the industry in terms of like what is compliance, what is tech, what is features. Good selection, I'd say.
We have, yes. And obviously this is only the key news that we bring to the pod. If you want to catch out more of the articles, please ensure that you subscribe to our newsletter. I'll kick this off today, and it's pretty big, I think. So we've had some news from HMRC in that they are abandoning making tax digital for corporation tax. This was tucked away in their new transformation roadmap, but not something I guess we're massively surprised on in the profession, in the fact that the constant delays to making tax digital for income tax and the big focus on that area has always meant that corporation tax has been kicked down the path. And there are additional complexities with that, in the fact you've got multiple different entity types, multiple different ways of reporting income and expenses. And I think that HMRC have just taken the view that actually trying to bring the corporation tax element into an MTD platform isn't really at their best interest. And what they need to do is come up with a new plan part of their, I guess, overall digital roadmap that brings corporation tax to the forefront of that strategy. Disappointing the fact that, there was an original vision for MTD, and it feels like now they're just abandoning and weakening areas of it. I don't think any of that original vision is probably going to be hit, where you still have all of the additional compliance burden, small businesses and accounting firms. So I'm really not sure if we've seen a win. We've just seen, well, maybe sort of software vendors, actually. It's probably been a big win for the software vendors who have now gained a whole load of new customers that have to use digital software. But apart from that, I'm not sure we've seen a win from the whole scheme.
No. And I think it's timely that it's happening alongside the long-awaited roadmap for digital first tax that sparked a lot of mixed reactions as well from accountants and other tax professionals. So it's quite a surprise to see that they've released the vision, but it's very cautious, and there's quite a few gaps within that vision in painting, the picture for what the rest of the tax agenda will look like. There's an article that we caught this week with by Tom Herbert. So he covers more around HMRC's plan to digitize 90% of the customer interactions by 2030. And there's more of a shift to automated and self-service processes on a pay-as-you-earn basis, so that you can pay the tax as you go. And it's the rest of the vision for it is, it's quite interesting to see how they'll roll in like tax agents as well, and the push for AI, data and automation. And I see that as like something that will reduce fraud, enhance the guidance, etc., etc. In that particular article, there's quite a few critics for it. So that I think one of the critics was talking about the fact that from ICAEW, they pointed out that services for tax agents remains far behind the rest of the world, and the roadmap is lofty promises with no deadlines. So I don't know if you caught that output, but it looked like there was great vision, lots of caveats, lack of concrete timelines, lots of concerns around what the agent concerns with, the fact that agents would exist, but how, and the absence of any real deadlines. So it seems like, big vision, transformative, but not too much in the way of the weeds of the details of it.
I think the main concern from the accounting profession is the widening gap between what agents can do in the platform on behalf of their clients and what clients can do directly, because so many businesses rely on accountants to basically do all their work for them. I've had it many times where clients that I've worked with have basically said, we don't want to access our government gateway. We'll just give you the login. That is, not secure at all. And we don't want that to happen. We want them to have a login, but they want us to do everything. They just want to outsource what is a very stressful area for them. And if HMRC keep stretching that out, so the individual has to go and do more and more, then that's going to create a problem for them.
Well, Ryan, isn't this just a classic issue? I just think it comes down to education, financial education. Most people, most of us normal Joe Blogs people who would start or be in a business, you're not trained to do the types of filings or have the awareness of exactly how to do something. It was never taught at school. It was never taught anywhere. And so I can have a lot of empathy for the fact that, the expectation doesn't marry up with all the things that you feel you have to learn as a business owner. And I just think that it's, it does make sense that HMRC should understand there should be provision for that, in the fact that you appoint an expert because they at least have the experience, the know-how, they know where the mistakes are. If you're not trained in it, then I just think that, what are we saying to our entrepreneurs in the UK? We don't exactly make it easy for them.
Agreed. And I think we could go into a completely new conversation about the poor financial literacy in the UK in terms of the way we've structured our education. And we know we've got great advocates out there that are trying to make a difference and make that change. And I'm 100% in support of them. But yeah, from a HMRC digital strategy perspective, I'd say it's pretty weak. I agree with, the quite damning assessment. Hopefully they listen to this and create some more tangible structure on the back of it. Anyway, pivoting into something not HMRC related, we have a new release from Mayday. And this was something they put on their roadmap from pretty much the day they launched, because that was a great example of the way an app should work. Set out what you're trying to achieve, put down an order and you're going to do it, and then deliver on that over time. And Mayday have now released deferred revenue and prepayments. This follows on the back of Mayday Recharger, which is all to do with the multi-entity recharging of transactions between the different intercompany accounts. Balancer, which looks at those and then reconciles that automatically and flags the differences. Then Brag, the bank reconciliation across the group. So if you're in one entity, you can make the payment on behalf of the other entity. And then Mayday HQ, which is that chart of accounts management tool across all of their relevant businesses in that same group, which actually is a huge problem. Whenever I work with multi-entities, the fact that the chart accounts is just kind of everywhere between the entities makes it really hard for recharging and structure. But deferred revenue and prepayments is something they promised and is now released. And it's all to do with looking at cost and revenue journals and then looking at the period they're relating to and then automating the journals that go behind that. So identify the transaction, which uses a tool called Recognizer, which makes sense, right, for what it's doing. And then basically plot the path of how you're deferring this over a period of time, be that revenue or cost, and simply draft your journals and one-click approve and post into Xero or QuickBooks Online. As straightforward as you can get. The only probably challenge that Mayday is going to come across with this is you've got a lot of these OCR tools now bringing in prepayments and deferred revenue recognition. So as it ingests the information from day one, it picks up what that period is related to and then automatically creates those journals on behalf. It makes this element probably less required if you've got those tools. And I believe that even Dexter looking at this on the back of the likes of Briefcase, who released this earlier this year.
So our assessment is useful, well done for getting out there, probably a bit aware that maybe it's not going to service as many people if you're using other applications.
Yeah, I think timing wise, say it came out a year ago.
Would have been game changing.
No competitor. It really depends on what platform you're on now. These systems are not prevalent everywhere. And if you've got multi-entity, it still makes sense to have a Mayday in place, and you'd probably use the prepayment system inside there because you're handling all of those regular journal movements. So once again, it's all to do with what is your app stack? Don't get everything. Where do you need to focus? And what do you need to do to consolidate the level of or the number of apps you're using down to the minimum to still meet all of your needs?
QuickBooks have put on their website a QuickBooks Launchpad, which basically tells you what they're building and what has been launched, what is in beta, and what is new that month. So they've got quite a few different ways to filter it. So you can look at what's for businesses, for accountants, for bookkeepers, and filter it by what type of feature as well, and the launch status. So things like get paid faster with Pay by Bank is on there, and it talks about the fact that it's in beta and it talks about what it does, and you can click through and really sift and see what is relevant to you as an accountant or for your business clients. Very interesting to see how they've kind of put it all publicly on the website. And as you said, it really allows you to track what are the new features within an application. So I think it's very slick. I'd like to see something a little bit more like this across all the applications, if anything.
Yes, that's really good, actually. I think that I've always been critical about the fact that QuickBooks have never had any visibility, really. You'd have to jump on the product, the quarterly product summary, and even then, it wasn't always great at assessing or, diving into the detail of what a product launch has done inside the QuickBooks platform. And maybe that's because they hadn't released an awful lot, but they are doing a lot in the UK now. And they need something like this. And actually, it's probably one of the best in the market that I've now seen. So if you are working with QuickBooks, even if it's only a few clients, make sure that you are subscribed or favorited their Launchpad. And then you'll see everything as it's been announced with a summary, as well as a deeper dive into the critical features and what they do. But you're never going to get, I guess, an independent assessment of what goes on. And we have talked about on this platform the new AI accounting agents that QuickBooks has been releasing. And at first, I'll admit it, I was quite buoyant about what they're trying to do. Really kind of taken aback in the fact, whoa, this seems pretty big. And then following that, disappointed with actually what comes straight away. But let's dive into some of the detail behind this. So one of the big things that they released was the new bank reconciliation screen. Now, this is something that was probably quite poor compared to their competitors, but they have completely revamped it using AI. We'll pick up a couple of things that I think are quite game-changing, quite new. One of them is that it can now handle more complex one-to-many matches. So many sales invoices that have been paid by one receipt. This is something that the new AI-powered bank feed can do. I'll have to test it to see what's the complexity it can handle, but the fact that it has that functionality, it's only going to learn and improve over time, is really positive. And then it's also going to suggest new payees, which is something they didn't have before, and the categorization side. But it's also maintaining all its critical old functionality, such as bank rules. So if you've got a bank rule in place, it's going to look at that first, it's going to see if that applies, and then it's going to use the, I guess, more advanced AI tools to allocate it after that. But bank feature is only one area that they're focusing on. The accounting agent is supposed to be covering a far greater array of functionality that will benefit any QuickBooks Online users. So let's talk about some of these, because pretty much when it was launched, all it had was the bank reconciliation screen and the conversion tool. Now it has the ability for you to upload bank statements and extract all of that and bring that into the bank reconciliation. It can look at context gathering. So any conversations you need to have with your client, it will look at, well, what is it that is outstanding? How do we now communicate that with a client? How do we create some communication around any of that? It is flagging to you transactions that are ready to post and ones that need your addressing. Once again, trying to automate a lot of that processing, reducing your need to look at the detail based on a risk assessment, which is what I think AI tools that really bring to the fore here is bringing risk assessments and directing you into what you need to look at. And with that, it also has anomaly detection. So it's looking at potential errors or miscategorization inside the system, the things that like what used to be like Zen and Connect, etc., where you're connecting a different tool into the system, it's pulling down information and then putting to you maybe these transactions are not how you intended them to be classified. Now you can do that directly inside QuickBooks Online with a new accounting agent. So they're releasing more and more tools, and I think this is only going to grow. And based on what they're saying, they're going to look to achieve, I think this could be very powerful over time. Once again, still early days, but the bank reconciliation bit is something that they have made a big difference on from day one.
Very good. I've got something moving away from QuickBooks. Alexion.AI is making waves in the accounting world by bridging the gap between people, processes, and technology. It's a startup that's aimed at strengthening accounting firms and tackling the issue that most accountants and I'd say businesses face when key employees leave. So does a vast amount of the expertise and the logic. So the CEO, Lisa Griffin, previously scaled Laurel.ai and is now working on amplifying, not replacing, the accountants. So the AI platform creates a memory infrastructure that codifies the judgment and expertise of accountants into reusable logic, ensuring that firms that don't lose the value when the people leave or move on. It could be something that I think a lot of businesses would want to have control over, and it's something that I've spoken about a lot before, is yes, the use of AI in general, when you have employees engaging and using AI, but they use their own instances of it. So you do lose a lot of the control if you don't have a strong kind of policy around how your employees engage with different systems, in particular with AI-based systems. However, I think there's been some critics of, I think I'm probably one of the critics as well. So AI is exciting, but the over reliance on it, again, it kind of undermines the subjective nature, the relationship nature of what we do with clients. And that's, I say we, in every sense, in every industry, that's the value. And AI can't really replace a lot of that nuance and doesn't know how to judge for it, doesn't know how to predict for it. And it's still in its infancy, so won't necessarily be able to do that justice yet. So here's a huge area for potential, and that it will help manage like the existing challenge and perhaps the stage of business that we're all at. But it's questionable whether it will be able to create something that's truly adaptive and can grow and evolve. And I am maybe the critical protagonist at the moment, because I very much compare this to when e-commerce launched, and we saw that technology over that period was just in flux for so many years, and only now has it come to a point where, not only now, but certainly the last couple of years, I'd say, where we've seen dominant platforms who've been well invested and spent a lot more time to really rigorously interrogate user experience, customer experience, take down the cost of technology. So the build therefore is cheaper, which means that it's cheaper to run the platform in general, and therefore the cost of user acquisition and etc. is more sustainable. We're only seeing that in the last few years, but back when e-commerce first launched, we had so many players. It was like a boom of every single e-commerce system you can imagine. So I wax lyrical on this. I think it's a great application. I think it's a great problem that we need to solve for, but I just don't know that any technology has right now the strength and legs to go the full distance, unless they're here for the short time, maybe sell out to a bigger fish and are building one feature as part of it. And maybe this is a really critical feature that at least can go the distance. But yeah, looks like a great tech. Great idea. So it'd be interesting to see how it evolves.
Agreed. It's hard to put your money on where to invest with AI at the moment, right? Because this sits so in flux. But I also had another article on AI. Acting Office, which is a practice management solution for larger accounting firms, has released their ACCAbot, which is their AI assistant, which is helping with bookkeeping. Now, it will look at things such as PDFs and CSVs, but the main thing it's doing is auto allocating bank transactions. So automating the sorting and explanation after you uploaded your bank statements or connected your live feeds directly into it. So similar to what QuickBooks Online have been doing, we talked about, is taking those transactions, auto classifying them, and then learning from what you do to then train it to do something different in the future that aligns with what you're trying to achieve. Now, it focuses on the bank reconciliation side, mostly for those smaller clients where you've got that big burden now from an MTD perspective, and you're trying to bring some of this in-house, where you'll see a lot of these firms are now offering outsourcing for the smaller clients, but it needs to be very automated. This is something that I think ACCAbot is aimed at. But as well as that, the big problem is when you've got something that's different, how do you get answers to what your queries are? And they've built into their tool, using the inbuilt portal at the Acting Office platform, now be able to just push those queries directly out with the responses directly inside the system, and then sucked back into your bookkeeping. So either it's going to be a note form, or they're going to classify it themselves based on options you provide, and then it'll pull back in and then automatically push that into the trial balance. And if you're aware of how Acting Office works, it takes trial balance and then drafts your accounts workflow from that as well. So you're getting the full flow from bookkeeping all the way through to final accounts. The final bit it does it's using a tool called Excelify, which auto converts PDFs to CSVs. So if you're used to getting information from your clients via a portal, then you have to put it through a different tool, and then bring that information back into your practice management or document management system. All of this is covered within the Acting Office platform. So from a security perspective, far more effective. Something that I guess we haven't really touched on at all in any tools that we've looked at, because you've got PDF converters out there, but makes sense now, especially if you've got lots of information going back and forth, and data security is becoming more and more important. This actually little release, I think, is probably one of the better pieces of functionality in their new ACCAbot.
Is this something that you're seeing is going to be a big problem for more and more accountants, more and more users going forward that can benefit from it? And just to understand, like, we see like a lot of enrichment of technology, and I'm just curious about whether there's something here that's like not solved for already with other technologies.
No, I don't think this is like groundbreaking or game changing. I think what this does is it identifies an upcoming problem. A lot of accounting firms, they've got a large number of clients that are got self-assessments, and they know they need to be compliant for MTD. They need to be filing their information more frequently. The client doesn't want to do that, but they also can't charge 4 times the fee to do the bookkeeping or processing for them. So they need to find a hybrid way of handling that. Something where it is an increased fee to some extent, it's an enhanced service because you're now doing the processing and you can ensure the compliance, but using automations to handle that quite effectively. And there are other tools that can do that. But if this is all in one platform, you've got your client portal, which your client is already used to interacting with. You've got your bookkeeping system straight in that, and you've got your AI wrapping around that. Rather than, I guess, if you've got another example of a system, you'll have a client portal, you'll have your OCR collection tool that the client has to interact with. You've then got your finance ledger that the client probably has to interact with, and email communication back and forth asking questions. All of that comes, one, quite chaotic for the client, but also, 2, creates a lot of additional admin burden inside the firm. So if you can bring it all into one wrapper, I think that's quite powerful. And you've got tools out there that do something similar for like landlords, for builders, etc. But that doesn't cover everything as far as I'm aware. The closest I've seen is probably Free Agent from a bookkeeping, finance, communication tool. So I think it's interesting what they've done. I think they've just really found a bit of a problem, a pain point that the bigger firms are going to experience, and then try to resolve that for them.
Nice. I'm going to end on something different. So we've gone round the house of compliance, maybe a little bit of rantiness at HMRC. We've got some new tech updates, and now we're going to go full circle to something that I think is quite baffling and has clearly kicked up a bit of controversy amongst industry participants and accountants and vendors alike, is the 36-month contract. So especially in an era where flexibility and adaptability are pretty much the lifeblood of the business world, it feels like a huge step backwards. Especially, one of the things that we say is like, how can you make a 3-year commitment right now when you couldn't have predicted 12 months ago or 24 months ago what impact AI would have had on some of the technologies that you engage and use with today? Is quite a lot of money that's tied up into a platform that might not be the best fit later down the line. And I get that vendors want the security, but this really isn't the early 2010s, I'm going to say, anymore. Definitely not the 90s anyway. And I kind of think back to the inception of Bankable, which I think was super interesting. They back then had managed to secure 10-year contracts, which I think is no mean feat, but it was a very different landscape. And actually later down the line, especially with banking infrastructure and the vendors that I worked alongside, the termination clauses were pretty much 12 months worth of fees, in some cases 18 months worth of fees that we would have to pay if we wanted to exit a contract that no longer benefited us, with minimum monthly contributions. So it's quite interesting to see this in the accounting sense, and especially in softwares that are payroll orientated. It's such a steep exit ramp, and it's not the customer first approach that you'd expect in a SaaS business, where subscription models really should be like month to month and don't force these sort of long-term, unsympathetic, outdated constructs that are not really good for, an evolving world that we engage with now. For God's sakes, if I pay ChatGPT $20 a month and I can cancel it month to month, I certainly am not going to pay 3 years worth of contract fees for a payroll software. And there's absolutely shed tons of options out there at the moment. So I don't know whether it's just a complete rant that I think is super justified. Dave Selleck, Johnny Gorn, Alistair Barlow, a few of the people have waded in on it. And they're really talking about the fact that businesses deserve better terms, freedom, and not some sort of golden handcuffs arrangement, which, believe me, having been subject to that in banking infrastructure with a lot of different banking tags, I am so in favor of change.
Yeah, I like the term golden handcuffs, though. That's cool. I've not come across that one before. But yeah, I agree with you, Indy. I think that the mandation of it is pretty terrible, to be honest. It's a system that has been always monthly in an area that has flux on costs all the time, because it's generally employee number led. And if you're a payroll provider, then you've got a vast number of clients with varying employee numbers. And if you lose a very large client, then your employee number will drop. And are you locked in? Is that a minimum spend? I mean, some of this information we haven't, I guess, got at this stage. But there are some benefits of having a 36-month contract in certain areas for certain sizes of business. So there's a key operational software that, they've just signed up for it. They're less likely to change in the near future. They're locking it in for a discounted price over a period of 3 years. Actually might make sense, but they should have the choice to do that. And a 12-month contract is quite normal. I just think trying to force people down this route, you're actually risking losing them. I think that's the only bit that would force them down it, is that they can't escape. They can't make the change quick enough before, I guess, the terms are enforced for them to, before they lose access to that software and the ability to generate or do the work for their clients. So yeah, I think the whole approach is just terrible.
Agree. End the golden handcuffs, shall we say. Also, just I think Dave makes a really good point. It's the PE era. It's the era of the kind of predictability around your acquisition, or your ability to have like recurring revenue locked in for a certain amount of time, which we completely get. But it's just I think that it doesn't do well for most businesses. It doesn't bear fruit for most businesses, I think, to have that around them. So
I'm joined again by Ian Gregory, the CTO of Advancetrack, and we're diving into the issues that AI seems to be posing to our industry, mostly around, I guess, talent. Like we're seeing now the big four firms, at least, reducing their intake, the graduate intake, looking for AI to replace it. And there seems to be a common question now where people are trying to bring in a role that says, can AI do your task? Can AI do what you need, what you're overwhelmed with, so we don't necessarily need to recruit replacement? Some positives to this, because we've always had a talent shortage. But Ian, I believe you did a talk around this not that long ago. So what is it that you feel is becoming a challenge? And do you think that this may be something that just grows and evolves over time?
I think AI, there are some people with some very massive marketing budgets pushing it into every factor of life, including accounting. And I've spent a lot of the last couple of years, going around a lot of AI talks and reading a lot to understand what impact it's actually going to have. And I think over time, it is going to have a massive impact. I think the question is, how long is it going to take, and is it actually the right thing to do? I mean, I spent some of my early career in manufacturing, and I remember when I was first learning about it in the 1980s, there was this idea of the lights out factory. And here we are nearly 40 years later, probably. And I think there's only about a small, tiny fraction of factories that are actually lights out. And the interesting thing is, if you look at manufacturing, the dominant model now is what's the ideas proposed by Toyota, which is actually melding automation and people really closely together. And they would argue that a machine will do what you tell it, whereas people, they can be watching what's going on, they can improve the process, they can adapt, they can spot quality issues as they come through, whereas machines just can't.
Yeah, and that is something that I think we are starting to see. We're starting to see it a bit with cloud, and the systems, the data capture systems, the reporting systems that start doing a bit of our work, which AI is only going to accentuate. But we've had a talent, not crisis, but definitely over in the US is a talent crisis in accountancy, but a talent shortage in the UK for a long time. Do you think this is just going to be exacerbated by the likes of the bigger firms reducing their staff intake, and therefore it's going to drive that utilization of AI? Do you think that's something that is just inevitable now?
I think it's going to change in many ways. I mean, at Advancetrack, we've been running a talent index for the last couple of years, which is a survey looking at this globally. So it's a global problem, not just the UK. In fact, the only country which actually got a growing supply of accountants is India, where our team is, which is quite handy for us. But if you look at the way the automation's impacting, I mean, there have been reports in the paper at the weekend, for example, about the big four having a diamond structure, whereas historically they'd have had a lot of graduates. Now they've got a few senior managers, a big middle, and a few graduates. It'd be interesting to see if that model begins to take off. But I think what's certainly going to change is the sort of requirements of accountants. There are bits of the profession which I think are going to be quite easy to automate, whether that's with AI or traditional software, perhaps written by AI. So the whole, for example, the accounts preparation process is ripe for automation. It's incredibly well defined. There are odd areas which are a little bit ambiguous, but for the most part, it's easily defined. Now, I don't know if that's going to be in a year's time or 5 years' time, but it's going to happen. And there are a lot of people who specialize in those sort of very numerical tasks. And I think if you're one of those, you need to be thinking, how do I develop my people skills? So I think what may happen is that, we'll begin to see the emphasis of the sort of firms people are looking for change away from perhaps technical specialisms towards people with good interpersonal skills. There's always going to be roles for technical people, but it's probably going to get even more technical and beginning to move into advanced statistics and data science type stuff. So it's going to be interesting to see how the range mixes, but there's always going to be a need for people.
Yeah, and I think that, I mean, the diamond structure, right, is a short-term thing, because I guess in a way, the small point at the bottom always has to move upwards, like, because everyone's about progression, and so that middle point slowly will disappear if no one's training the next level. So it'd be interesting to see how that works out. The diamond structure has to evolve; it can't stay permanent in theory. But what do you think firms should be doing then to make sure they're ready for this change? Because that's where most firms are worried. It's like, I know AI is going to have an impact, but what do I do?
It's a very good question. I think the first thing is to really think through how you're adding value to your customers. I mean, I talk to a lot of accountants, and it amazes me how many still believe that their primary value is just delivering a set of accounts. And I've run small businesses. I see it as a commodity.
Yeah.
And the question you need to be asking is actually, how am I adding value to all of my customers? And that's more likely to be through advisory type things, just relationship stuff. So I think that's the first place to start. And then when you understand how you're actually adding value, asking the question, okay, so there's still a lot of routine stuff I need to do. What's the best way of doing that? Now, automation's a way of doing it, but I'm an IT guy. I spend most of my life trying to keep up with this stuff and struggle. It's changing so quickly. It's so complex. And there's an argument that says actually, if you look at something like an outsourcer like ourselves, we've got me looking at this, which means you can outsource to us and you get that blend of people and technology that's optimal for your business without having to worry about getting into the deep, technological minefields and all security things and data protection and just keeping up with the market.
I think a lot of it's going to be about those effective partnerships, because you can't do everything yourself. We built up that skill set to just do, accountancy incredibly well. And we kind of outsourced or referred on people if they need legal help, if needed to talk to a bank. But that relationship's now changing. Now, what was an interesting thing I experienced the other day is went to networking and talked around a room, and only I think one person in that room said they actually would go to their accountant if they were seeking business advice. And I think that has to change. As you say, we've become a commodity and we need to drive more into adding value. And if all we're doing is using automation to churn through a set of accounts, we're not going to do that. There's going to be a tech company that resolves that element, and they don't need accountants. So I guess the other bit would be, you've said about a firm, looking at how they want to deliver their service, they probably have to pick a path, right? Do they want to go highly automated and kind of strip back from the advisory and just be essentially a factory of throwing out compliance, or do they want to become very people focused? And that's going to take a while to evolve into. You can't just kind of replace all your staff overnight. So have you got any, advice apart from, working with strategic partners such as yourself that can help them on that pathway? Is that something that Advancetrack themselves assist with, or do you kind of enable that restructure of delivering service whilst they're kind of going through this change?
I think we're very much, we see ourselves as a bridge in this. But we are in the how do you deliver sets of accounts, bookkeeping, those sort of things in an efficient way and with people so we can provide the insights. We're never going to be in the advisory, actually delivering advisory. So if you're in a position where you decide, actually, I do need to move my firm more into that specialist advisory space, then we can provide a bridge for you between where you are now and where you want to go in the future, so that you can keep delivering the compliance work whilst reconfiguring your firm in the direction you want to go.
And not only that, but it enables them to create a bit of financial capacity by, you're very cost effective in how you kind of deliver the service. So you can create a bit of margin to invest in that. So you're not, the concern, I guess, is that how much money do you have to put in to change your business structure? Well, one, you can do it over time. And two, you can use a partner such as Advancetrack as a bridge to kind of create a bit of redundancy, you create a bit of time inside the practice to then take that next step forward. So I think there's been some really interesting nuggets in this that I at least, I'm taking away from it. And so thanks again for joining us and talking through how AI is going to probably impact the profession.
Right. Thank you. It's been a pleasure.
Thank you for joining us on today's podcast. And don't forget to sign up to our awards, because they are coming around the corner very, very quickly. If you haven't already engaged with the awards, you can make nominations. The portal is open for that, so you could submit anyone that you think is deserving, any brand that you think is deserving of being recognized. Categories are all listed on the website. Give us a look up, and then don't forget to join us on the 22nd of September for the Digital Disruptor Awards up in Manchester. It's the day before Accountex, so if you are planning to go to Accountex, then come along and join us, meet some more people in your industry and get involved.